Hello and welcome to the Hash. It's Zack, Seward, joined by Naomi, Brockwell, David Morris, Jen Sanasie, and Will Foxley today. We've got a lot to talk about, so let's do this thing. Will, you have the first story of the day. Lead us off.
Is right. So Cathie Wood's ARK Invest has teamed up with 21 Shares to look at, or has actually issued a Bitcoin ETF investment perspective with the SEC. It's just an application at this point. Of course, we've seen over the years a lot of applications have come out, and a lot have been swatted down by the agency. Famously, I think the biggest reason for this is just a lack of a cohesive market across the world. And then Bitcoin's price volatility has been kind of like the two reasons given for it. But now that we have ARK, which is a pretty large firm, getting behind this, we might see a little bit more motion. Of course, there's a lot of applications on the table right now, and it typically takes at least like 2 months for the application to be reviewed by the agency, and then it takes even longer for the application to be accepted. So I think for the most part, we're expecting to see like a decision on these applications not until the fall. It's also interesting to see 21 Shares get involved with this. They have issued a lot of ETFs in European markets, mostly on Swiss and German stock exchanges. They have a lot of different ETF products for many different coins, not just Bitcoin. So interesting to see them team up with a US-based firm to launch a US-based product. Zack, you helped edit this piece, and you are familiar with both of those groups. So what's your takeaway with this new ETF proposal?
Another one in the race. I like the horse race coverage of the Bitcoin ETF application. Remains interesting despite all that boring stuff that you were just saying, Will, about the mechanics of the approval and the delays and the
nice to
time
Will.
and the
I'm
bureaucratic
sorry, I like boring things, Zack.
nightmare of getting this thing over the finish line. But in horse race terms, I'm happy to see Cathie Wood as a character here. There's all sorts of characters in the Bitcoin ETF horse race. We got Anthony Scaramucci, we got Nideg, we got all sorts of people who are trying to get this thing done. But no momentum really to date. Some I think Van Eck's proposal was delayed for a second time quite recently. So I don't know what the insiders in the regulatory world of crypto are saying about whether or not, hey, this could be the one that wins the trophy. But the more the merrier in terms of this being an interesting race that's worth watching. So that's really it. I mean, I think we've been kind of like expecting action on this from a new SEC chair, and we just haven't seen it. So I'm going to toss this down to David for his thoughts.
I guess I have more of a question than a thought, which is, when we see these ETF denials, they usually, at least the way they get reported, is they've been turned down because there's questions about the market structure of Bitcoin itself. So my question is, are there material differences between these ETF proposals? Zack, you described it as a horse race. And if so, like, what are the differences, and are they going to make a difference to, whether the approvals go through if the underlying question is, Bitcoin markets being manipulated?
I don't know. I don't have any unique insight into how SEC regulators are looking at this thing, right? You have to list the custodian that you're working with. You have to list, various cross your T's, dot your I's. I don't know what kind of rubric they're using at this point to figure out which one is better than the other. But I would imagine that, this has become such a big deal that when they announce that one or multiple, which is rumored to be the case, one or multiple receives approval, I think it's going to be incumbent on them to sketch out why those ones made the cut when others did not. Will, I saw you had your hand up, and then Naomi, if you want to jump in after that.
Yeah, and Jen too. We're all getting in on this very boring topic, Zack. So that's interesting. I think in general, the critique has been the volatility. And again, that's just part of Bitcoin's thesis. But over the last year, we've seen other products that have ETFs have tremendous volatility, oil being probably the greatest example. So I think that the deck of excuses is running thin for the SEC. But Jen and then Naomi.
I was just going to say I've almost lost hope in this whole ETF story. I've mentioned on the show before. I was listening to a talk by Hester Peirce, and she said she was looking to. The SEC was looking to places like Canada to see how ETFs would unfold and kind of inform. So it would inform the regulation in the US. And I think that they've had enough time to look into what's happening with ETFs in Canada and make a decision. It just feels like it's going really, really slow now. It's interesting to hear, though, 21 Shares background. So maybe they have that extra edge that will help push this application through, given that they've dealt with ETFs in so many different regions. So I'm interested to hear what comes out of this, but unfortunately, I am not feeling hopeful. It just feels like we're beating a dead horse at this point
It's
in
2
time.
Canada references this week. So you're
I know,
full
and we're
with your
only in the
quota.
first.
Nice.
I know we're in the first half of the week. I love it.
I'll jump in. I mean, I don't think that it's going to be a matter of a different company with an edge coming in and suddenly they're going to approve it. They're not approving this because they don't like Bitcoin and they don't like the market structure. They think that there are, going to be structural instabilities that could come as a result of a Bitcoin ETF and all of this. Their main argument is that, unlike something like Grayscale Trust, you can't stop someone buying an ETF, right? And so there could be just kind of this upending of the market is what they fear. But I agree with you, Jen. They've had so long. I think it was 2013 when the Winklevoss twins first came out with their initial ETF. Like this has been going on forever. Like how long is it going to take for them to look at the Bitcoin market and say, okay, because at the moment they're really just precluding people from entering this market via an ETF, and it doesn't seem, according to their rhetoric, that that's going to change anytime soon because they haven't seemed to have lightened that rhetoric around Bitcoin. But we'll see what happens.
Well, I have a question for you. I mean, I think the times have changed aspect of this is really interesting, right? Like, okay, we have a publicly listed US crypto exchange by the name of Coinbase that's become sort of a trusted gateway to the crypto industry for many people. Do you think that people are just going to be like over the Bitcoin ETF when it finally wins approval? Or do you think that that still represents the lion's share of how people are going to access this asset class going forward?
Was that a disguised price action question? That's what it
No,
felt
not
like.
price action at all. I mean, I think people are interested. Like, people have very interesting takes, right? Is a Bitcoin ETF bullish for Bitcoin, or is it just some derivative product that may live in the investment and retirement portfolios of many an average Joe, but isn't actually as bullish as we've sort of imagined it in our minds for all these years? I'm just curious if you have a take on that.
Yeah, for sure. Just messing with you. I think in general, you're totally spot on there. I think an ETF stands as a way to bring in a lot more liquidity, meaning users into the Bitcoin space. Of course, it's not the best way to get Bitcoin. Buying Bitcoin is simply the best way to get Bitcoin. But a Bitcoin ETF is something a lot of people are familiar with. If you have conversations with basically anyone over 45, I'd say, not to be rude, but they want an ETF, or they I don't know how old Zack is, our resident millennial.
I'm getting ready for I'm getting ready for you to just say that I'm a Gen Xer. It's not true, okay? I'm a geriatric millennial. Let's set the record straight.
This is how rumors start.
God.
But no, I think you're totally spot on. ETF is how most people are going to get exposure to Bitcoin, I think, going forward. So it should be a big boon for the industry when it happens. Of course, there's a lot of FUD out there right now, like a tremendous amount, more than I would have thought we would have seen through a bull cycle. So I don't really know how it's going to address price action, but in general, more products are good for the market.
Yeah, and just to nail down, and I'm not intimately familiar with it, but you guys have both made references to this. I mean, one of the big appeals of the ETF is, maybe the only big appeal is that there are, institutional investors who have certain requirements as far as what they can invest in. So there are basically investment funds that are set up in a certain way that they can't buy Bitcoin, and an ETF would allow them to. So, there's the convenience on an individual level, which I can see some appeal to, but there's also, I think, a fairly sizable number of institutions that, we've seen some institutional interest, but this would make it much easier if that's something that you believe there's interest in. So that's the appeal for the market side of things.
All right, well, let's go to another boring but significant story, in my opinion. We are going to talk about Coinbase, 4% APY on USDC deposits. Okay, sounds kind of boring. If you're a DeFi degen, 4%, laughable. Get out of here. But if you're mom and pop and you have a savings account, and your savings account is giving you approximately zero yield on your savings, this is actually quite interesting, and it represents Coinbase, I think, expressing its most direct, I don't want to say attack, but shot across the bow of traditional savings accounts everywhere. This is interesting to me. I think we're going to see more of these yield products come out. We obviously saw something from Compound yesterday that was more targeted toward fintechs and neobanks, but this is something that run-of-the-mill Coinbase users can do to get a little bit of yield on their idle savings. I'm going to throw this to you, Jen. What do you think about this savings product? Is this something that banks should be worried about, or is this Coinbase giving banks a run for their money, or are we still way too far off from that being a reality?
I think it's definitely something banks should be worried about. When I think about the mainstream audience, though, I think that while trust is deteriorating when it comes to fiat currency and central banks, there is this kind of relationship between the general person and a bank where we think we put our money in the bank and it's safe there. I know that's deteriorating. This product feels like it's going to take a little bit more for everyone to kind of wrap their heads around. And so I think it is definitely the future. I think banks should be worried about it. And I'm just really interested to see what the uptake is going to be. Naomi?
Yeah, I think it's kind of this very interesting hybrid, this middle ground between banks and the DeFi world, because we've seen, in the DeFi space, 300% yield per minute. And people are like, yay, and they put all the money in, then they lose all their money, and then they put all their money in. And it's kind of this giant gamble, this huge risk, but people love it. And it's really one of the few options out there where people can actually make, kind of passive income on their savings. You stake something, you get yield. And then banks, they're quite right. We haven't seen interest in bank accounts in the US for a long time. In Australia, I think it's somewhere around like 2.something%, and that's like a long-term deposit account. But in America, you can't even put money in a long-term deposit account at most banks. Chase has certainly not offered that for years and years. And so there's no way for people to earn money on their parked savings. So they know if it's just sitting there, it's losing at least 2% a year in inflation, a lot more at the moment as inflation has risen. And so now you've got Coinbase, which is kind of this interesting, they're in a very unique position, right? Because they have this FDIC insured accounts on the fiat side. So they've kind of garnered that trust from people where they say, we're kind of like a bank, a crypto bank, put money in us, but also access crypto. Now, obviously, these accounts are not FDIC insured. They're not part of that because they don't have FDIC insurance for the crypto part of Coinbase. But I think people still associate Coinbase with the more kind of trustworthy traditional bank type model. So the fact that they're able to offer yield to people without people having to take the risk of going the DeFi route and wondering whether there's going to be a bug in the code or whether there's going to be a hack, some sort of, a flash loan attack or something like that. I think it's a very interesting product that may, attract a lot of people. But Will, I'll throw to you.
I'm going to take the opposite side of this just for fun. I think in these cases, you have to look at where the yield is coming from. So there's always that saying, like, no such thing as a free lunch. And here, Coinbase isn't just, they don't just have 4% interest on all these reserves sitting aside that they're willing to give out for free. Where it's coming from is speculative token purchases, typically by users on their platform itself. So I got an ambulance going by. It's trying to save me from Naomi. She's going to attack me in a second. So I think in general, like, we look at these high yields, especially in DeFi, and the reason those yields are so high, why we get between 10% and like 100,000% yield a year, is because people are buying tokens for speculative prices, and then that just funnels right back into interest for if you're staking or yield farming or whatever. And Coinbase is just doing a miniature version of that. So, like, should banks be worried? I don't think so, because at some point yields dry up because people stop buying speculative tokens. Like, at some point the bear market comes, and these tokens just don't have any value.
And that's the key thing to keep in mind here. So yield farming is a great parallel. You have the yield farming opportunities pretty much like at certain points in the life cycle of a DeFi product, because they're trying to attract that capital. And this 4%, there's no guarantee that that's going to last longer than a month, 2 months. Who knows? It's up to Coinbase. They can change it any time. What I'm really curious about here is whether there's a relationship with Circle, because what this does, whatever it does for Coinbase, it's probably really good for USDC. I do not know what kind of liquidity you're going to have in terms of using that USDC while it's deposited. So, for example, if you're thinking about displacement of Tether for traders, that might not be a thing that you can combine with getting this 4% yield. But it certainly seems like there's a competitive question here for Tether. If you're going to hold USDC and you get returns on it via Coinbase, then why would you hold Tether? So and I don't know if Circle has anything to do with this, but I would be curious to learn more.
Yeah, should we were saying, so USDC is administered through Center, the Center Consortium, which has two members, Coinbase and Circle. So Coinbase and Circle very much tied up in the fate of USDC, which lately seems to be picking up quite a bit of momentum as perhaps the most above board dollar-backed stablecoin in the market. So it's going to be really interesting to see what happens with USDC on this one. Let's wrap this thing. I just got word. We're going to wrap this thing. We're going to throw it to a break. When we get back, we're going to talk about the controversial life and reported death of an early Bitcoiner. Stick with us. It's the Hash.
Welcome back to The Hash, everyone. We're going to open up this block by talking about some very surprising news in the crypto space. So MPEX founder and Bitcoin evangelist Mircea Popescu was found dead. He reportedly drowned off the coast of Costa Rica. This was an enigmatic man. He was a legend to many people. He was controversial to a lot of people. MPEX is where Satoshi Dice was listed back in the day. There was this big kerfuffle with the SEC when they came to investigate Satoshi Dice, and they were basically stonewalled by Mircea, and he kind of went into like crypto legend status. So I want to dive into that. But I want to throw to the group to get your thoughts on this. You know, he's on the one hand considered like the grandfather of Bitcoin toxicity. On the other hand, you know, he's just kind of this widely admired figure by many as well. He's just kind of, I mean, whichever way you want to think about it, he was kind of this strange, to many people, often unpleasant man, but he was one of the true originals of the crypto space. And he kind of is what made the early days of Bitcoin so memorable. He's like just kind of this larger than life character. But I'll throw this to the group, and then I want to dive into the SEC exchange because it's one of my favorite memories from early days. But yeah, Zack, do you have any thoughts on the passing of this?
I don't know. I mean, it feels rather suspicious to me, and I think it's been confirmed by death records in Costa Rica, but it feels odd. Like the Bitcoin boating accident and like the drowning accident, like there's sort of eerie parallels there. Final blog post was kind of weird. And then just, I think the spectacle of this man's life over the years, I believe that he had 4 associates who I think they referred to themselves as his slaves, his sex slaves, maybe. So just the fact that this guy lived on the edges gives it a bit of spectacle, and the whole episode is a little surreal. So I think I'm reserving judgment on this one, and I don't really know what to think, but it is quite an interesting little chapter in Bitcoin history. That's all I got. I mean, I'll throw this to you, David. I don't know if you've looked into this character much, but there seems to be a lot there to unpack.
Well, I will say, you know, like many of us, I've been in this for a while, and by whatever, you know, strange luck or bad luck, I wasn't aware of, and I hadn't interacted with this guy over the course of my time in Bitcoin somehow. But the thing about him that I found most interesting is people were, you know, whether this is a real death or not, but as a figure, a lot of people were drawing connections between his like toxicity, his obvious problems as a personality, and his role as one of the first people to actively and sort of viciously call out scams based on crypto. And as somebody who, you know, devotes a lot of my time to fighting and exposing scams and scammers. It's an interesting question, at least, right? Like, do you have to be, I don't know if I can even swear on here, but do you have to be an a-hole to really go after these frauds and scams? And is that inherently mixed up with being an unpleasant person? I personally would like to know. People seem to like me, but I'm not sure. So, you know, that I think is a bigger question than just one person's life. Is what is the mindset? And honestly, I think I would personally be inclined to say yes. You kind of have to be a bit of an a-hole to do the work of policing the purity of a concept like this, when the people around you who seem very nice and friendly usually are the people who are trying to take your money. So that's the one thing that I would say on the topic.
Yeah, I want to kind of take a little bit of time to dive into this exchange that's gone into crypto legendary history. So back in the day, it was 2014, and Satoshi Dice was listed on MPEX. And so a representative from the SEC wrote an email to him, and he then posted all of their correspondence public, and you can check this out, but basically says, you know, I'm from the SEC, I'd like to speak to you concerning the listing of Satoshi Dice. He responds and he's like, go ahead. Talk to me if you want. Then they're like, okay, well, let's do a phone call. He comes back with the most outrageous, responses. He's like, well, the best we can come to if you absolutely need real-time communication would be hashtag Bitcoin-assets on Freenode. You can connect via, some obscure, esoteric, technically complicated link. I'm usually around, but, there's nothing a call can carry the letter couldn't carry as well, is there? And then this goes back and forth. She responds, I'm unable to connect to Freenode, so email will have to do. Then she asks for all this information. She says, we would like to request that MPEX voluntarily provide certain documents to us, a list of all Satoshi Dice shareholders prior to the sale of the company, an account history for Mr. Eric Voorhees showing the sale of shares, payment of dividends. This is something that the SEC often does. They kind of use this goodwill thing where they'll say, voluntarily give us this thing. And, it's not everyone will push back against this. They'll just say, I don't want to get in the SEC's crosshairs. So they voluntarily give away this information that they're kind of pressured into giving. Mircea was the opposite of that. So he responds and basically says, in as much as you're soliciting private information, you'll have to sufficiently establish your authority to do so, which includes defeating specific challenges of jurisdiction that on a cursory examination seem to bar the institution you claim to be associated with from making these specific requests, basically saying the SEC has no jurisdiction here. What are you even doing? Then he says, so far, all we have is an email address, something which is spoofed on a regular basis. I get numerous notices of various sorts each week purporting to come from all sorts of banks and other institutions I've never had any relationship with, for instance. So he's just trolling this person, pushing back, like he's really standing by these hardcore principles of privacy. She responds as kind of, it gets more and more exasperated. She's like, well, you can verify it. I'm on the website. You can call this number. The number's available on the SEC website. You can do all of the verification. Like, I am the person. Will you cooperate? He says, perhaps we misunderstand each other. Should you wish to establish your authority on the matter, you would have to present all of a legal basis upon which the SEC is investigating a Bitcoin enterprise, and then goes through this like ridiculous checklist of all of these reasons why he's not going to hand over any information to this person. This goes on and on. And basically it ends with him saying, in the spirit of candor, let me make it perfectly clear that what's being discussed here is nothing else and nothing short of the SEC's ultimate relevancy and importance in the Bitcoin space. And so far, I'm not particularly impressed. Let us work together to improve upon this shaky basis, if at all possible. And it's just like, this went into just legendary status. He is well known for this. He's also well known for purportedly having 1 million Bitcoin, perhaps being the only Bitcoin millionaire in history, meaning having like over 1 million Bitcoins. But it's just, he really was very well respected by the Bitcoin community when this happened, and he just did not back down. And so, yeah, it's very, very interesting life story, but I wanted to bring this up because a lot of people may not have been aware of this history, and it's kind of, I think it's important history.
I think it might be interesting also to throw in the results of that exchange, which was that Eric Voorhees ultimately wound up paying a fine of about $50,000 off of the sale of his Satoshi Dice stock. They did ultimately settle with the SEC, but it's mostly interesting because it's such a small amount. If you come back to 2012 and look at how these things worked.
Yeah, absolutely. But let's change track here. David, I'm going to throw it back to you. What's going on in China at the moment? We've got crackdowns and hash rate. Like, dive into that for us.
Yeah, sorry, this is my TV skill that I'm still developing, which is the pickup when I have the next story. So as
You're very
people
good
have,
at it.
I mean, I've just demonstrated otherwise, but thank you. People have been, I'm sure, seeing this information. China, starting maybe roughly 2 weeks ago, it's hard to put a specific date on anything that happens in China policy-wise, but they started making clear that they were not going to have Bitcoin mining still in the country, and it has really happened this time. I think there's no clear statistics because this stuff was not necessarily tracked all that well in the first place. But there's numbers like 90% of miners have already left China or are about to. And the result is that the hash rate of the Bitcoin network goes down. That is the total amount of compute power that's being used to solve blocks and secure the network. And the reason I think this is important is because there's very little understanding of how hash rate works as a market mechanism. And basically, what we're going to see is as the hash rate goes down, and we've seen some big drops, and there's going to be another one coming up as the difficulty resets. But basically, for the people who are still operating mining systems, whether you're in the US or people who have moved out of China, what that hash rate drop means is that it's cheaper to make a Bitcoin. And the upshot is that based on conversations that I was having last week, and this is before whatever the next reset is, but we've seen Bitcoin's price drop from 65,000 to about 35,000 or a little less. Miners are telling me that their profit margins have remained almost exactly the same because of the drop in hash rate. So we've seen the price of Bitcoin go down by half. Miners are still doing just fine because of this hash rate reset. And the big questions are, when are we going to see this hash power come back online? People are trying to move machines to new places that they're taking out of China. And so there is this big disruption, but it's mostly about, the hash rate is a very specific kind of dynamic in Bitcoin, and felt like worthwhile to walk through kind of some of the implications, what's going to happen to the market. And of course, some of these miners are publicly listed stocks. So if you're looking at stocks, North American-based miners might be a good one right now. I don't know if that implies any questions or comments, but
Not
Does
my mental.
anyone
That might have been the hashes for a stock tip. I don't know. I don't think we've ever had that before. It's like
Stock
what?
tips.
Stock tips.
Alpha.
Bitcoin
We should do a
mining
little
stock
segment.
tips. That'd be cool. Anyway, I defer to Will on all mining matters. Will, I mean, I think, yeah. Why does hash rate matter again? Tell me why this
For
is something
sure.
that people should pay more close attention to besides just price activity.
Yeah, for sure. No, I think David did a great job summarizing it there. Hash rate is a great indicator of where the mining market is at. It shows you kind of profitability for miners who typically operate really, really, really close to margin. Kind of the saying in the industry is miners are the longest in the room. Like they're longer than Bitcoin hodlers. They are longer than Bitcoin stock ETF holders or whatever you have. Because they have a bunch of equipment that has to turn out Bitcoin for them to break even. And right now, and over this past year, it's just been a great time to be in Bitcoin mining because you have been making a lot of money. Of course, Bitcoin self-adjusts. This difficulty period is coming to a close here, and it's going to readjust, and then profits readjust as well, which is the interesting thing about Bitcoin compared to other mining vendors where Bitcoin can kind of self-correct and readjust the difficulty, and then you don't make as much money. So I think the short answer here is we're going to see a lot of hash rate move. That's going to change a lot of profitability for a lot of miners around the world. And it's just a story to pay attention to for the next 6 months or so.
Yeah, it is interesting. I'll just mention before we wrap up is that, you had the articles come out saying like, 85% of miners in China or whatever, or across the world has stopped mining, and we didn't see a corresponding drop in hash rate. So it's interesting that maybe we've overestimated the amount of miners in China, or maybe we're overestimating how many of them have actually been shut down in China. But it seems like, maybe it's an evolutionary process, and they're cracking down, but it's going to take a while. But it was just an interesting, it was quite a dramatic difference in the numbers there, which I was a little surprised at. But let's change track here. What have we got next? I think we've got
it's me, so
Tom
I'll just
Brady.
take over. Yeah, we got Tom Brady. So it's just me. So we started the show with a little, I guess, boring stories, according to Zack, and we're going to end with some excitement. So we have Tom Brady, we have Gisele Bündchen, and we have Sam Bankman-Fried. So Tom Brady and Gisele have become equity shareholders of FTX. This new deal makes Tom an exchange ambassador and Gisele an environmental and social initiatives advisor. So along with their new positions and equity, they received crypto as part of the deal. Zack, you wrote this story, so I'm kicking it right off to you. Fill us in on the details, and then we can chat more about sports and crypto, the ongoing saga.
Sports and crypto, the ongoing saga. Yeah, no, good stuff. I guess I did write this one. This feels distant. Many things happened this morning, so sorry if I'm a little bit fuzzy here. But FTX is really going hard on the sports stuff, right? So I feel like we saw a little bit of matchmaking happen, because Tom Brady and Sam Bankman-Fried, they had an interview at Consensus, at CoinDesk's Consensus event last month, where they were able to sort of have a wide-ranging conversation about crypto and their respective impacts on the world. So it kind of feels like this is sort of that's, I don't know. I imagine that is I don't know if this is true, but I imagine that is the initial meeting, and this is the outcome of that meeting, right? So Tom Brady is, I guess he's serious about this crypto thing, I mean, he's still rocking the laser eyes. There's been a lot of, he was getting a little bit of a mini roasting yesterday because someone pointed out that Tom Brady laser eyes may have been the local top of the Bitcoin market. So he was sort of leaning into that joke a little bit. But when he said that he didn't see crypto going anywhere last month at Consensus, him becoming an equity shareholder in FTX would suggest that he's putting his money where his mouth is when it comes to that. And he's also going to go out there and try to grow the brand. So interesting development, definitely in the sports vein, with FTX seeing that this is a great way to get its name out there. And interesting and notable that they'll be involved in FTX going forward.
I mean, so does that mean we could say that this is CoinDesk had some part to play, some small part in bringing these two together? No, hey.
I asked this of the FTX representative, and he said he was going to send a note and get back to me, and I've yet to hear back. But if that is the case, if that was the matchmaking, then put it in the impact column for CoinDesk. But I cannot yet. We cannot yet claim that. So anyway.
Yeah, well,
we've been talking a lot of
Oh, sorry, Jen, you had something else. Go for it.
No. I've been talking so much. You go for it.
Well, I was just going to say, not to undercut our own, substantial industry-wide influence, but this one gets a big thumbs down from me. I mean, anytime there's a celebrity involved, there might be some sort of short-term something, but long-term bearish. This is a model and a guy who throws a football. They don't really have much.
It's Tom Brady,
I think.
Use those
Tom
laser
Brady
eyes to
compare the guy who throws a football. Wow.
Let's not just say a model and a guy who throws a football, the model and the football guy.
I mean, I'm from Texas, so this goes way back, but we'll leave it at that. But no, I mean, in all seriousness, they might be substantial figures, but the entire emphasis on celebrity, and particularly celebrities who don't have much to do with crypto. I know that in football, it's a slightly different situation because there are a lot of people who are taking their salaries and making some really significant financial moves for themselves. And so that might be a slight variation, but in general, if you look at anything other than let's say this wasn't an exchange, but an actual token project, this would be an instant red flag that this is something you don't want to put your money in. Obviously, it's a little bit different if it's an ongoing business with revenues and things like this, and not just some S coin. But it doesn't add any credibility. It doesn't. FTX is on a good trajectory, and if they feel like they need to get into this celebrity shilling game to keep that up based on the real things that they're accomplishing, then more power to them. But I don't think this is something that we should encourage in general as a way to do business.
I appreciate your cynicism David.
had-
I kind of share the like celebrities come in, you're probably at the top of the market point of view. But you know, I think it's great. All people can get involved. Crypto is not going to stop celebrities getting involved. It's wide open doors. Anyone can do it. I just think that the celebrities, when they do get involved, get a lot more attention for that involvement, and it seems to make it seem it's more heavily weighted than perhaps it should be. So I would concur somewhat. Maybe less of the like southerner snarkiness from me, but I do definitely appreciate your sentiment.
Well,
but
the Texas thing goes back to the Patriots and the Cowboys, so don't worry about it.
Oh, I see. It's like a personal beef for you. All right.
A sport thing.
Respect.
Yeah.
Respect.
All right. I think it's time to go.
I am biased, though.
home.
Oh, it's time to go. My job is here. It's
time to go.
I got the hook. Let's
fade on
get
Zack.
this done. Hey guys, thanks for doing the hash with us today. That was fun. Will, David, Jen, Naomi, wonderful as always. Thanks so much. We'll do it again tomorrow. All About Bitcoin is on today at 3 p.m. Eastern on CoinDesk TV. Check it out if you haven't already, and read some stories. We'll talk to you soon. Thanks.
Bye.
Take care, everybody.